In this video, I'm going to walk you through the difference between reviewing a balance sheet on an accrual basis versus reviewing a balance sheet that is on a cash basis. Let's go ahead and hop over into QuickBooks Online and I'll show you exactly what I'm talking about. Okay, so here we are in our demo balance sheet, and you can see across the top you have the ability to toggle between the cash method of accounting and the accrual method of accounting. The cash method basically just says that you're going to record transactions in your books when the cash moves. So it doesn't matter when the actual activity happens, it matters when the cash moves. On the accrual basis, it's going to be the opposite. So it matters when the activity happens, not necessarily when the cash moves. A great example is when you send your customer an invoice. The customer is going to pay at some point in the future. So that point in the future, when the cash moves, when your business receives the cash, that's when you're going to record cash and revenue. Now, on the accrual basis, when you send that invoice, as soon as you send that invoice for the work that is done, that is when you're going to record your revenue. So you would record revenue on the P&L, and then you would record a receivable on your balance sheet. I'm going to point you to some very distinct accounts on this balance sheet. You will see right here, we've got an inventory asset. Right here, we've got an accounts receivable account. Scrolling down further, we've got an accounts payable account. Now, what happens when we go up here and we choose to run this report on the cash basis? You will see that the accounts receivable account is gone, the inventory account is gone, and you'll also see that the accounts payable account is gone. These are very different reports. It's really crucial that you understand the difference between the cash basis and the accrual basis and how you are keeping your company's books. There are 5 different accounts that we commonly see on a balance sheet which are going to exist on an accrual basis but will not exist on a cash basis. Number 1 is accounts receivable. This is money that is owed to you from somebody else, most commonly a customer. Number 2 is inventory. So these are the goods or the parts or whatever that you're going to sell in your business that you are currently storing before you sell them. Number 3 is going to be prepaid expenses. These are expenses that you pay for before you actually use them. Most commonly what we're going to see is software that you pay for up front. So you pay in January for an entire year subscription to something that is going to be a prepaid asset that you're going to use up over the course of the year. Number 4 is going to be accounts payable, and these are funds that you owe to somebody else for some reason. And then number 5 is going to be deferred revenue. So this is money that you receive from your customer before you actually do the work. So you actually owe them the work. It's actually the opposite of accounts receivable. So those are the main differences between a cash basis balance sheet and an accrual basis balance sheet. It is very crucial that you understand them. An accrual basis balance sheet is going to give you a much better picture of what your actual financial health of your business looks like than a cash basis balance sheet. It's important to know whether or not you keep your books on an accrual basis or a cash basis and what you need to effectively run your business. Hope that helps, and I will see you in the next video.